Kenya, that is from the 1st January 1990 to replace sales tax, which was in operation then since 1973, probably the longest ever, tax formation that we'll be discussing this morning from the others that we've had that have been introduced recently. We speak of 2018, we speak of say 2016 coming down, but this particular one that we discussed today, started somewhere in 1990, and therefore that should tell you something, should ring a bell that probably this is one subject that we all need to be on alert, because it touches you in a way or another. Value added tax, VAT. You keep hearing this. If you do not hear it, then at least when you buy something, you notice that somewhere under, of course, on the receipt, there is that aspect of VAT, and you probably do not know how this happens, how this operates. In most cases, we've seen people marching into the streets because of VAT, because they speak of the taxpayer, and in most cases, when they say the taxpayer, it is technically to say the value-added tax that it is that you pay on every commodity that you probably buy somewhere in the shop, and therefore we seek to understand so that when you speak of the taxpayer, especially at the time when we're supposed to hear the budget, then you understand well what is this that you get to pay and how then you get value of the same. Of course, the gentlemen that are here will not task them to explain where our tax goes to the moment we pay, because then they are not in a capacity to address that, but all the same they'll just enlighten us on the forms of how we get to pay for this tax and what is involved therein. Joining me for the conversation, as always, gentlemen from KCK, it's Business with KCK, Geoffrey Nyamayeria, who is here, a tax accountant. Good to have you this morning. Well, I felt like, it's been forever. I guess it's because I'm used to seeing you every Tuesday, and then, well, last Tuesday you're not here. Yeah. Well, Madaraka Day celebrations, but we're glad that you're here today. And we also have Edwin Thiongo, who's a tax lawyer. Asante sana for your time. There have been lots of legal battles today. Now that is in regards to matters politics. And I mean, I'm sure we're going to have a couple of them once, of course, we have the budget out, as many will complain. And I mean, from the reports that are being projected, we're expecting it to pinch even harder on the taxpayer. When we talk about value-added tax, then does it mean this tax that we speak about that we have to go back to the taxpayer's pocket, pinch harder on the taxpayer? Is it on the commodities and generally on VAT?
Yes. So thanks for having us this morning.
Yes, thank you.
Seems like it's been a while. But
yeah, I know, right?
We get too used to being here every Tuesday.
Yeah.
So when you speak about VAT is mainly tax on services and commodities. So the general rule is that all commodities and services are taxable for VAT, apart those which are included in the schedules to the VAT Act. Okay. They're either exempted and some are zero rated. So you'll find that is how the government from time to time regulates how VAT is paid. So on budgetary allocations and under the Finance Act, for Finance Bill, for example, if the government wants to enhance taxes, it is reclassification that happens. So they are unlikely to introduce a new commodity or a new tax or a new provision within the Act, but they reclassify. So certain things that were supposed to be exempted are now removed from the exempt column and become chargeable to tax. And I think one of the classical examples is the introduction of VAT to fuel. Yeah. So previously, before this introduction, fuel was not VATable, but with that reclassification, you end up having some commodities being taxed. Okay. And therefore, we expect if the government is to pinch harder for VAT, that is what we'll be looking for, what has been reclassified. Okay. And I think I saw in the Finance Bill there are quite a number of proposals to reclassify some items.
Care to share? Or we should all wait for the surprise?
I think because the bill is still being debated. I think it's going to be passed, I think, this week. We should be able, in the next Tuesday, we should be able to have a full list of all other proposals. I know for the Law Society, we've been able to do our feedback and give our views with regards to some of the introductions and some of the changes we were introducing. But by and large, sometimes our views are not taken into consideration, but we hope that this time
they will be. All right. Well, at what point does the common mwananchi then connect with VAT?
Linda, you know, under the tax pyramid,
whether I like it, okay?
There is the peak and there is the base. We know, all of us know the pyramid. Yes. Now, if the government wants to make more money, what will it do? It will increase the taxable items. which go to the common mwananchi down there. So if they put VAT on bread, then it means the common mwananchi will pay VAT on the bread, and they will make more money. Now, just to add on to what Eddie was saying, VAT is value added tax. How does this value come about? Assuming I have a hotel, so I will purchase nyanya, tomatoes, and nyanya, mboga, and warus, make a meal.
Okay.
By this, I will have added value. Value is like utility. All of us probably did business education. There were like 4 forms of utility.
Utilities.
That is form, time, and all these are in the further run of having value to everything. So that in a nutshell, that is how VAT comes about. So any mwananchi, the fact that somebody has gone to a wholesaler, has gotten the bigger chunk of a big sack of salt, broken down into smaller bits, that is value added. The fact that he has transported this from the wholesaler to the next destination, they have added value in terms of transportation. So VAT will affect across so many things, though there are 2 schedules that affect VAT. There is the first schedule and the second schedule. First schedule is the one that deals with exempt items. Anyway, we'll talk about that
as we proceed.
Yes.
Okay, well, then who is to register for VAT and how is one of the key things then that we get to ask. Is it at the level of supply, at the level of production, or what?
So I think VAT is based on business turnover.
Okay.
And you said that you're supposed to register for VAT if your business turnover is above 5 million. So if you're doing business or anticipate to do business that will be above 5 million, then the law requires you to register for VAT.
Okay.
And this is, unlike turnover tax, this is mandatory. If you go beyond 5 million, you must then register. So you find that when you're registering for VAT, you register, but you need to classify the business sectors you're in for ascertainment of what kind of income you're generating, so that you will realize that when you register for VAT, it can attract a rate of 16%, which is the common rate, the common tariff on all products. You have a rate of 0%, and 0% is still VAT tax. So that's why that the rate is 0. And maybe along the way we'll explain what that means in terms of calculating. Then you have exempt items. So when you have business that is exempt, even if you're registered for VAT, for example, you will not ideally be filing annual returns or monthly returns because there is no revenue that is vatable for you to report.
Okay.
And therefore, anyone who has a turnover of above 5 million is expected to register for VAT unless otherwise communicated or given exemption by the commissioner.
Okay, well, that is probably well understood. And when we speak about the chargeable aspect and what is supposed to be charged in this case, so what exactly are we looking at when we speak of VAT and what is to be charged, more so when we localize the conversation?
Now, VAT is charged on a taxable item or good or service. Okay. For instance, if Eddie's services as a lawyer, it's a taxable service. Okay. Okay. When you purchase items that are taxable or sell items that are taxable, then VAT is applied on that. But we'll find that there are some items that we'll discuss later that are not applicable for VAT purposes. Yes.
All right, and speaking of this, then I have seen scenarios, and I mean this is just on a random thought that probably you send for goods from abroad, not necessarily to be bought or what, but someone just sends you a package from abroad. And when you go to receive it, then there is a fee that you have to pay for tax. Is this under VAT?
Yes, it is. So you have VAT, that is the local VAT, which is paid along the supply chain locally, which is what is common in shops, supermarkets, retail stores, and so on and so forth. But you also have VAT chargeable on exported or imported services. So for example, if you bring in goods from another country
Yeah.
for sale, the presumption is that those goods are chargeable for VAT because you're bringing them into the supply chain. And remember what Jeff has explained, that VAT is not paid by the owners of the business. It is sort of a relay.
Okay.
So people are running relay 4x4, for example.
Okay.
You run past the baton, the next person.
Mm-hmm.
So VAT is targeting the final consumer.
Okay.
And I think when we start explaining how input-output works, you realize that people like myself who are charging VAT, I have no VAT obligation. In essence, if I charge you 16%, I have not paid it because I'll pass that obligation to the next person, then the next person passes the next person. Whoever eventually consumes the product without adding value for sale is one who bears the cost of that VAT. And ultimately, VAT becomes the most lucrative tax for the government because it is the only way the government ensures everybody is contributing. So therefore, when you bring in products from abroad, that tax will be charged VAT for the imported product, and that's a fee maybe you'll see. And of course, there's some form of levy, customs levy, but VAT is actually indeed one of those taxes you're going to pay for that product. Yes.
All right, and when you speak about everyone, for a moment I'm like, is it really everyone? I am told there are individuals who are exempted from the same, okay, well, not necessarily the buying of stuff and everything, but there are times where I'm told there are certain things you go to buy, you're exempted from VAT. I don't know whether it is applicable in these stories where you hear when you buy stuff from the AFCO is not more expensive, when you probably a person, living with disability, then you are exempted from tax from this. Is it the same, and does it fall in the line of VAT? And what is the criteria that goes into exempting these individuals from paying?
VAT has the same, like we said, there is exempt, there's the VATable goods. And the VATable, that's where you find fuel at 8% and at 16% the normal VAT. Though people with disabilities have exemptions on paying taxes. It's actually not VAT alone, but they are exempted from paying taxes. Though, like we said when we were talking about employment income and how we file employment income, we had mentioned that anyone that is eligible for people with disabilities have to go and register with their organization and all that, and this is how you get exempted. But if you haven't been registered, then it means that you have to pay taxes.
Okay.
Yeah.
Okay. Kindly unpack this for us, Edwin, or this statement. A person making taxable supplies below the registration threshold may voluntarily apply for VAT registration upon meeting the said requirements.
So you find that the mandatory provision of the VAT Act is if your supply per year is going to be beyond 5 million.
Yes.
But the law is saying, because I said, and I keep saying from the first season, I've been saying that payment of tax is voluntary. People pay taxes because they choose to. So if you feel you're a Kenyan of goodwill and you feel you still want to contribute, you can actually register to the commissioner for them to register you for VAT. Now, the phrase, so long as you meet the qualifications, is in essence in line with what Jeff is saying. You are doing business that is VATable, that attracts VAT. So to answer the question of the requirements, maybe I'll go back to what Jeff has just mentioned about the exemption. So to understand VAT, for me, my thinking, I've always applied a general rule that I say everything is taxable for VAT until otherwise specified. So the two categories is you have exempted services and exempted goods. So you realize that exemption, and when you're saying there are certain individuals who are exempt, is when you're dealing with, for example, diplomatic missions, dealing with the UN, dealing with the army. With the army, you'll find that the first schedule is going to say, if you're making a supply to these particular individuals who are classified there, then you cannot charge them VAT. In fact, what you do is that they give you an exemption certificate, so that you make the supply and support it together with the exemption certificate to say, I made supplies worth 10 million to the UN, but the UN has given me an exemption certificate to say, I can't charge them VAT. That's the first category. So then you have the second category, which is the exempted goods, where we are saying that we are exempting these goods because the government thinks these goods are of so much value that if you were to levy tax on them, you'd actually interfere with the supply chain. And you find that the second schedule of the VAT Act primarily deals to great length with agricultural products. So you'll have seam seeds, you'll have what the things I even myself don't know what they're used for, but you'll find that they are the minor categories that the government is saying will not tax this. So you find that a lot of that is to stimulate the economy, and therefore it is that reclassification that the government is saying if you're within this classification. For example, if I'm dealing with exempt products only, and I give you a good example is people developing residential houses.
Yes.
So if you're developing a residential house, of course, the law says that the income generated from selling, leasing residential houses is exempt for VAT. Then if that's the only business I'm doing, even if I'm within the threshold or outside the threshold, I have no business registering. Because in any case, I am not going to charge VAT. So it is that qualifying statement that so long as you meet the qualifications, you can then apply for registration of VAT. And I think that is primarily how the general rules. And I think if you look at the schedule, you'll see that, and there are quite a number of exempt categories of products that you can look at and see what the government means when they start reclassifying. And I think maybe when we discuss the budget in the next season, and I think the next Tuesday maybe the budget might be almost out or out. So we'll be able to discuss and see what this reclassification means for us and what that does to spur the economy into growth.
Okay. All right. What then does one do next upon, acknowledgement and saying that, what, I am, obliged to proceed and register? What then is expected of you, or what then do you do next?
Now, the moment you reach the threshold, or now, I'll go back to what Eddie was saying. Under VAT, there are two registrations. There is the compulsory bit and there is the voluntary bit.
Yes.
Under the compulsory bit is where you're compelled by your sales. You've gotten into the threshold, which is 5 million and above, and you're dealing with vatable goods, then that's compulsory. Within 30 days, the moment you hit the threshold of 5 million, within 30 days, then it means you're compelled to register for VAT. And on voluntary basis is where I am actually a lawyer, I am dealing with vatable services, I need to get registered for VAT. Now, upon registration, which is usually done through the KRA portal. Some time back, it used to be those tedious processes where you go to KRA, get a form, you fill, and then it goes back to them, they sit down and register you. But nowadays, it's through the portal. You get in, register, input all your details. You will need your certificate of incorporation, and you will also need the PIN number of one of the directors for you to register for VAT. Now, the moment you've done that, the second step is you will need an ETR machine. So now, these ETR machines KRA has given a number of suppliers the mandate to sell these ETR machines. So these ETR machines, once you purchase it, or rather the supplier will take this ETR machine to KRA and say, Eddie has bought this ETR machine, this is his PIN number, so you expect each and every other month Eddie will be filing his returns under this ETR machine. So these ETR machines are the ones that KRA, if they wanted to come to your premises and verify what were your sales in the previous month or in a year, that's what they will look at.
Okay. Yes. Eddie, just to mention before we take a quick break, what are some of the rates applicable in, the VAT rates applicable in the country? Just mentioning them before we come later on after the break to probably expound some bit on the ones that we'd love to or would term necessary to expound on.
So I think primarily we have three classes of VAT.
Okay.
Maybe I mentioned them, alluded to them when we began. One of them is a usual rate, which is 16%. Then you have the 0% as a rate.
Yes.
Then you have the exempt as another category of VAT. So all these have significant differences when it comes to calculating. And actually you have now the 8% now on fuel. On And when you calculate all these things, you realize that where you have absolute numbers, for example, 6% and 8%, how we calculate VAT, determining your VAT position, has a significant difference if you are to calculate it as zero. So zero rated items, and we'll explain why we've moved from the regime of zero rated. So previously the exempt items were fewer and the zero rated items were more. But then the government was losing money, and we'll show you how.
All right.
So the exempt now is what the government is saying, okay, we can allow this, and therefore we have more exempt items. So of course now you look at that schedule, and maybe I'll have a chance to also give a few examples. You'll see what items are zero rated and for what reason. So primarily, there are three main categories, but the 16%, you have the 8% for example, what is being charged on fuel, then you have the 0% and you have the exempt.
All right.
And those are the main categories for VAT.
We come after this break to learn more on them, even as we learn on the aspects of calculation. Yes.
I think most guys would confuse 14% and 16%.
Okay.
Yes, please note that the 14% came into play in 2020 in February.
After COVID.
The government had to cushion guys
yes.
on the tax burden.
That's true.
So it came into play in April,
yes.
but then again ceased to exist in January 2021.
All right, you need to be keen on that. So we take a quick break and we come back, expound some more on the calculation of VAT, and maybe just an in-depth understanding of these applicable VAT rates that are there in the country after this break.
At Global Precast Panels, we have the best quality, durable, and affordable precast panels to suit all your needs. Manufactured under a controlled environment, we have the best precast concrete panels, precast concrete floor slabs, precast concrete perimeter wall, precast concrete columns and beams. Our panels reduce construction cost by up to 40% with absolutely no plaster required, including added soundproof benefits, convenient four-story buildings, schools, offices, residential houses, hospitals, and warehouses. Take advantage of our free transport. Contact us on 0702 24 7267 or 0796 24 7267. Global Precast Panels Limited, your reliable option for efficient construction.
These are the sights and sounds of a working nation. There are no shortages to remarkable ideas. What's missing is the will to execute them.
You need to stay relevant. If you don't, you're going to fade off.
Yes, they are a dime in a dozen, but the real meat on these bones comes from trying to realize them.
You just need to perfect anything. If it's drawing, if it's music, pursue it 100% because it's something that is giving back.
Join me, Violet Njoki, as I tell you the stories of these executed ideas, because yours could be next. Mondays, 7:30 p.m.
Hey, now that's hitting the right notes. When life gets boring, we bring out our play. You see, playfulness is in our DNA. It's in the way we move and laugh. It's in the way we walk, the way we rock, and how we just don't stop. You feel me? We add color to everything, to every day and every dish, because the world needs our crazy. We're the different flavors that make life more exciting. We're the ones who add color to every moment. Fanta, color every moment.
Well, the speaker is neither here nor there.
I should have done my outro from here.
Yes, no.
And we're just like that. I look beautiful.
Tune in to Morning Cafe, Mondays to Fridays from 6 a.m. to 9 a.m. with me, Linda Alela, only on TV47, the home of Untold Stories.
Raukia siku njema na tunukiwa offers kila siku. Pata offers zote mahali pamoja ili uongee zaidi, utume SMS zaidi na ubrowse zaidi.
Wewe usijali. Tuma namba ya kila supplier kwa hiyo soko. Ndio vile nitaongea na kila mmoja wao.
Very good. Piga *444 hash utunukiwe Credo double.
Raukia siku njema na tunukiwa offers kila siku.
A show with a unique perspective as to the property industry right here in Kenya. Not only showing you the properties available, but also showing you how you can improve the ambience, look and feel of your living and working spaces.
Yes.
Wow.
This is our office.
This is amazing.
Currently we have a lot of design ideas.
Ranging from your sitting areas, dining areas, as well as your resting and bedroom areas. We have it all right here on this show. Accessories, finishes, as well as the furniture. You can put it in your house to make it unique and incredible.
The Realtor, every Tuesday at 7:30 p.m. At Global Precast Panels, we have the best quality, durable and affordable precast panels.
Welcome back to the broadcast. It's Business with KCK every Tuesday as we look at the forms of tax that are in existence. Today, we focus on value-added tax, expounded some more on some of the rates that are applicable, what it is that you need to do so that you're able to register and what is required of you. And now we get to that point, after looking at the forms that are, or the rates that are applicable, it's important then that we understand them, in depth as we look at how they are calculated. And therefore, Geoffrey then takes us through the process of calculation that will also speak volumes on the respective rates that we are referring to. So there's 0, then there's the 8%, the 16%. So it is upon you to probably take us through the most important that we'd need to understand this morning.
Sure, Linda. Now, how VAT works is on input and output basis.
All right.
By input, this is what we mean. Any purchase that we make, rent that we pay, that includes VAT. That's like a purchase. That's a cost to the business. That is what we call input tax. Any output tax is the sales that we do. The sales services, the goods that we sell, that's what we call input VAT.
Okay.
So remember, under input VAT or output VAT, there's also the element of zero-rated input. So you'll find that under your output VAT, assuming that you sell goods to Uganda, that those goods are zero-rated.
Okay.
They are VATable, yes, but at 0. So you'll find that we'll talk about this when we're talking about refunds. But now, in this case, in this scenario, I just picked a few items.
I hope we can have this on screen.
I believe everyone can see this.
Would want to believe so, or maybe you might be forced to move. Well, okay, well, we're fixing that, yes. You keep explaining, it's all right.
Now what I've done is, remember, please note that I have written it's a VAT on purchases.
Okay.
You're not putting the whole value of purchases under this account. This account only holds the VAT bit of these purchases. So under this, if assuming 116, if you work backwards, then you can get the purchase price plus the VAT element.
Okay.
So the input VAT is placed on the left side where we have purchases.
Hold it right there.
Yes.
Collins, do we need to wait so that we can have this on screen before we expound? Because it would, all right, as they try to fix it on screen,
Yes.
They have it on their email, so they'll put it on the screen so that everybody is able to see.
Okay,
then
okay.
we'll come and maybe expound on that. Well, if necessary, you can still be taking us through, and then once we have it on screen, it becomes easier for people to view, because then it would be pointless for us to be explaining something that
maybe, let me just say, maybe as we wait,
yes.
Something that Jeff has said and has also captured my my memory on something. That because said, Linda, we said, because the only way you can transfer VAT obligation down the supply chain is if you allow people to claim what they have spent on VAT.
Oh yes.
So, unlike the final consumer, who will not be able to claim VAT, VAT from the inputs, In the case of a business, it is clear that the business first will be able to say, I have spent 10,000 on VAT. Before I pay you, you need to refund me what I have paid for VAT.
Right.
So we pass down the VAT obligation through the input process.
Okay.
So input is very, very important. It's actually so vital that if we get it wrong, then you can end up paying so much taxes.
Okay.
And secondly, if the law amends input taxes, if the input tax law is amended, automatically it starts taking away from VAT or adding.
Right.
So input taxes, for example, if I am a law firm, for example, and I'm paying rent, for example, they'll tell me the 16% I pay to my landlord, I am allowed to deduct that. And that's a refund for me.
Okay.
So you find that for businesses, VAT is neither here nor there, because at the end of the day, it's going to set off. So if my output was what I have charged someone is lower than what I have paid, then I'll end up being in a refund position, because the government owes me, owes me much more than I am than I owe them.
Okay.
We'll end up having in a credit position. Now, the current Finance Act, for example, I give an example which is what has come to mind. It's seeking to say, for example, we were not allowed to claim input taxes if you buy a vehicle into the business. They would say, if you buy a vehicle into the business, then we'll not allow you to claim VAT. But now they're saying from 1st of July, you'll be allowed to claim input taxes if you buy a vehicle for the business. Automatically, that is a significant add-on for the businesses. Because the VAT on a vehicle is very high. So when Jeff is explaining how input taxes work, you'll see that if you put a large input tax figure in your VAT ledger, you'll be on credit for a very long period of time.
Though they will regulate how many cars you bring.
So, and of course, I'm sure the regulations will
that is a factor.
Otherwise, then you'll be in business.
You will be in business too, yeah? You bring it and they will not be able to.
Absolutely, and you see now, it is that kind of thinking that will help us now unpack how the government sees giving in one hand and taking on the other. But then the regulations also say, even in terms of engine size, you will not bring a
smaller engine. Okay. That's interesting. That's interesting. And I mean, how many of them would be able to determine whether it's a business one or not a business one? Then you'll tell everybody in your home, please make sure that you use this channel. So at least
my company
I know, right? Okay, so we get to it. We have it on screen. Page 2 in particular of the same would be what it is that we seek to have on screen, Kolo, so that at least we can get to understand some more on that. And so there you go. Can you give us page 2, please? It should be page 2 where there's that graph, input tax.
That's where just push it up.
Yes, there you go. That's it.
Okay. Now, where we were talking about the input VAT, and like we said, an input VAT is what you get from the purchases that you purchase on a daily basis for sale. Even if you are importing these equipments or goods, remember that you will pay VAT on imports.
Okay.
So you will definitely have input VAT. Now, input VAT will arise also when you're paying rent, when you're paying Safaricom bills, when you're paying internet, and all these will lie under the input VAT side of the VAT account. This is what we call a VAT account. And then now on the right side you will have output VAT, and this is this is VAT that we have charged our clients, VAT that we have added on the goods. VAT that we've charged on VATable services. So this will fall under the output tax, under the output VAT. Now, these two figures, ideally they say they shall never balance. You will find that at any particular moment you will have either output VAT supersedes the input VAT. Now, either way is true. So if the output VAT is higher than the input VAT, then you will have what we call VAT payable, which means that you have to pay. In this scenario, we have under input VAT, we have 316, under the output VAT, we have 356. So under this scenario, then it means that we have to pay KRA in the subsequent month, by the 20th, our 50,000. Now, if the reverse is true, and we have the 50,000 on the input side, then KRA owes you.
Okay.
Yes.
And which we said by the time you are paid.
So now the only problem comes in when KRA tells you, please claim this from your next sales.
Okay.
So if next month you're still in business and you're still trading, assuming the reverse is true, then you will have to offset the 50,000 from
the new
from
what you were supposed to be paid by then.
Yes. But though there are companies that perennially they are on the input side.
Okay.
Meaning they purchase goods, let's say they manufactured this good and then they export. See what happens, it means that this company will never have output tax, VAT. So they will always be under input VAT. And those are the companies that you find KRA saying, please apply for your refunds before this and this dates.
Okay.
Yes.
Well, all right. It could be a good side to be in, right?
So you better get to a manufacturing
better get it
plant
right. Is it because they are so disciplined in terms of compliance? And now that we talk about VAT compliance, does it fall them in that category? Compliance-wise, now that is the next one. These individuals, I mean, by the time you're on this side, you're being told to claim. It's because you probably have complied in totality, and therefore, then you're on the good books of KRA. So when we talk about VAT compliance, what exactly do we then speak of in this one?
So when we talk about VAT compliance, essentially is the rules surrounding the filing of VAT returns and the rules surrounding payment of what you have filed. So you realize that we say that, and Jeff has mentioned that you need to pay on the 20th of the subsequent month. Now, VAT compliance begins with tracing back whether you have calculated VAT as you should. We've mentioned and walked through how you should calculate VAT up to the end, and we say now your calculation is sound, your inputs, and I'll go back to inputs and say one of the fundamental questions around inputs and VAT compliance is on inputs. So we say, if I say I bought this book for 20 shillings, then I must support it with an ETR from whoever sold it to me. Now, over time, KRA has been amending Section 17, which deals on inputs, to try and tighten the gaps that claiming input taxes is allowed. You remember Jeff said that if you're perennially on this other side, the government is now losing. Because it's a losing side for the government, because the more I'm saying, every month you owe me, the next month you owe me. Eventually the government will see we are really losing. So what they've done is to make sure that the claiming on input taxes are really, really restricted. So one of the things they've done is to say, over the last couple of months, you could actually just file, the last year, you could actually just file your returns, put the ETR, whether or not whoever has sold it to you has paid was neither here nor there. You still get your input claim allowed. But now they're saying, even if I have the ETR, and I bring it to KRA and say, this is my purchase, KRA is saying I can only be allowed to claim it if the person who sold the book has also filed.
Wow.
So of course that creates a serious twist into this system. It's supposed to be a voluntary system, but now you see, you are saying that I have the obligation to go back to the person who sold the book to me and tell them, please file your taxes
so that
for me to claim. Essentially, that is just a case of Edwin who's buying one book. What if you run a supermarket and you're dealing with needles, threads, matchboxes with 1,000,001 suppliers? Essentially, it is a significant cost. So what is happening is the VAT regime is under serious strain because suppliers now will need to employ 5, 6, 10 accountants to reconcile and make sure that everyone who they buy from is paying. Otherwise, they'll not be able to claim these input taxes. And of course, paying VAT when you have already some inputs is tying your cash flow. Because it means I'm taking money from my profit to pay the government, whereas I've already spent money and paid the same government. And someone else has failed to file it. So that has been one of the significant challenges. And you'll find that when you discuss with any tax expert, conversation on VAT rarely go to this side. Because this side is cast on stone. If it's taxable, it's taxable. If it's not, and therefore it is this other side that we have a lot of restrictions. And if you look at the finance bill, as we discuss it next time, you'll see that most of the ingenious amendments of the last 3 years have been on Section 17. They will say now we cannot allow you to claim if you don't claim within 6 months, it is lost.
All right.
So see, there are ingenious ways of making sure that this side is thin.
Okay.
This side is thin. And,
All right. And speaking of which, and if we move in marathon speed, then automatically there are penalties that are applicable in the event that you file late. So what are some of these that one would look at?
Ideally, if you are registered for VAT, the number one obligation is to make sure that you file your returns on a monthly basis on or before the 20th of every month.
Okay.
So now if you do not do that, I remember we used to have individuals under VAT, under the individual PIN, but then nowadays the penalty is 10,000 if you haven't filed. If you haven't filed, then you have a penalty of either 5% or 10,000. Is it 5? Whichever is higher. Whichever is higher. So that is the penalty for not filing. Now, if you file and not pay, there is also a penalty of not paying.
Okay.
So they'll charge you an interest on not paying on time.
All right.
Yes.
Okay, that's interesting. And we've touched on the refunds and how then they get to arise. I know we've touched on one thing on this input and output. At least I've learned something out of it. But the aspect of withholding tax, then where does it come in on or withholding VAT? How do they connect? I mean, just make us get into the loop in understanding this because it's really common nowadays.
So KRA has been appointing, and they say it's a collection mission. And I keep saying that withholding tax is not a tax by itself. It's just an administrative process.
Okay.
So KRA will appoint a person like myself and say, we've appointed you as a withholding agent. So whenever you do business with Linda, or a person who's on the position of Linda, I should withhold 6% or 4% as the case was in 2020. Then I'm supposed to take that withholding tax and remit it to KRA. So meaning it is output tax you are supposed to remit to KRA, but I'm remitting a part of it on your behalf.
Okay.
The ingenuity in this is because KRA wants to know how much tax Linda is supposed to declare at the end of the month. So if I declare 4%, automatically they can work backwards and know how much 16% is. Absolutely. So VAT withholding tax across the board on VAT income tax, it's a collective mechanism to just make sure that KRA understands and keeps track and is able to project how much they'll expect at the end of the month.
Okay.
So and of course I have serious reservations with it because one, we are appointed not by choice.
Right.
There is no remedy, there is no incentive for me to be a withholding agent.
Yes.
And for example, for me to be a withholding agent, I might need to employ an extra accountant. So nobody is telling me for the extra cost you're incurring to collect for us.
Get 0.5% of that. You can
makes sense.
It will make sense.
I've been in such a scenario where I've had to pay withholding tax. I'm telling you, it was the first time I was hearing about that. I have no idea. I'm clueless to date. I don't understand how they used to pay my, 3-4%, and I don't know what was expected of me. But what I know is that I was supposed to file returns, and therefore, again, when you get there, it's a bit of a hula baloo understanding how you get to file this return.
So Linda, there's different types of withholding taxes.
Now this one is on VAT.
So this is on VAT.
And then there's that one.
VAT is where I am purchasing.
Okay.
The moment I'm purchasing, then I'm supposed to pay you now, Linda.
Okay.
But when I'm supposed to pay you, what I'll do, so KRA, I think with time, they used to notice that individuals would like somehow balance the input and output VAT account. So this is what they decided. They said, you guys, I need to at least get this 2%. Once I get this 2%, of course you will offset it when you're calculating your tax and all that. There's a place where it mentions the withholding element. You insert it there and it will offset. So when I'm paying you, I'll come and do my calculations and I tell you 2% I've already paid for you in advance.
Okay.
Okay. So this 2%, has already gone to KRA. KRA has already pocketed and said, so we are waiting to see if Eddie will bring the 14%.
Wow.
Yeah.
Okay, that's interesting. And in this case then, I think in terms of employment, when you're offering consultancy forms, that's when now the withholding aspect comes on board. Of course, we'll be discussing some of this even as we proceed with this season of business with KCK. But as we come to a close, deregistration from VAT, pretty much a crucial aspect that we do not go without discussing, and turnover tax versus VAT. Briefly.
I think Jeff is the expert on the registration.
Okay. Jeff, how do we?
So now this is what happens also under the registrations. Remember the threshold, 0 or 1 shilling to 5 million.
To 5 million, okay.
So if business, let's say, was tough and you believe that I am not going to hit my threshold, that is 5 million, then you can apply to the commissioner for the registration by virtue of you not attaining that bit. The other deregistration way is by now the government, assuming that like what is going to happen, if the government comes up and says this good is going to be under exempt. So under such scenarios, if a vatable good or a vatable service is gazetted and they say this is going to be under exempt, then your company dealing in such a good will have to apply for the registration.
Okay.
So in such scenarios, you will find that you can apply for the registration, and it's a whole lot of a process.
Okay.
Yeah.
Well,
before they allow you to
take money away from them.
It's not easy.
Well, that's interesting.
Maybe Linda, there's something we said we were going to mention that maybe we
because of time, yes, we have to make it brief, yes.
So the issue with the exempt income is that the exempt income doesn't have the output column. So if you're dealing in exempt income, you're not allowed to claim input. Sorry, you have
you don't file returns.
Actually, for VAT purposes, you are non-existent.
Okay.
So they tell you that in your expenses, you will claim them together with the VAT you've already paid.
Okay.
That's the difference. For zero rated, it's going to be the same.
Okay.
But of course, this means that on the one side, on this side, you'll be having nil entries.
Okay.
On the input side, you have a lot of entries. So previously, with the regime of zero rated, the government was putting many people on the left side.
Okay.
And that's what the government realized we're actually losing a lot of money here. Just reclassify all this to exempt, let them not claim any inputs from us.
And then it's a 0-0 on both ends. Okay,
that's the thing we hadn't mentioned.
But yes, that's very interesting
like
because I remember
the guys who are building,
they'll be on exempt, and
they'll be on exempt. So they will purchase items, mawe, kokoto, and everything, which is charged the VAT.
Okay.
But then they can't claim it anywhere.
They can't claim anything.
Yes.
Okay, that's interesting. All right, as we close, if my memory serves me right, then I have a little understanding of turnover and VAT. So then, when we look at this turnover versus VAT, which one should I go for in this case? Because I remember we learned something. You know, that was the first time that we looked at the first subject that we looked at, turnover. Then I would clearly understand that somehow is also payment of tax that would equate to what VAT does.
So you remember I said the regime of turnover tax is an alternative to VAT for those who are outside the threshold. Before the turnover tax was introduced, if you are below 5 million, for purposes of your sales tax, you would not pay. You would not pay anything. Yeah. And therefore, over time, turnover tax now has created an alternative to VAT.
Yeah.
And in essence, the choice is that if you're below the threshold of 5 million, then automatically you're supposed to be thinking of registering for turnover tax if your business is classifiable under turnover tax. So turnover tax again is simplified than VAT.
Okay.
You do not have VAT accounts, you do not have reconciliation. Just do your gross pay 1%, you're okay.
Okay.
And let me say this, and
so
maybe
how will I
because I know Linda's telling me to give me a parting shot. This is what I'll say. That the regime of turnover tax is cannibalizing on businesses that are doing VAT. For this reason, if I'm selling this book at 10 shillings and I'm on turnover tax, my go-to market price is 10 shillings.
10 shillings.
Because there's now 16% on top of it.
Okay.
If Jeff is selling the same book and is on VAT, his go-to market price is 10 shillings plus 16%.
Plus 16%.
So if you were to go to a shelf and find the same book,
I will go for that one.
You buy from this other book.
Yes.
And that is a thing that has not been thought about, but the clarity of it is that it's really, really cannibalizing into the bigger businesses. So we have smaller businesses that are now repackaging the bigger items into smaller items and competing neck to neck. And the retail industry, in my view, if this is not addressed, is on its deathbed. And we need to actually say how then we mitigate the go-to-market prices so that the consumers do not end up favoring businesses that are on turnover tax as opposed to those who are paying VAT. And of course, people paying VAT are doing much greater service for the country because they are collecting for the government, they are reconciling their agents, and so on.
Well,
that's my party.
That's a good one for that matter. I hope sometimes we then engage also a KRA official so that they can get that one and see how they strike a balance in 30 seconds.
Now, mine is to give awareness to individuals out there. Did you know that if KRA owes you, it's supposed to pay you in 2 years? And if it doesn't pay you, then you accrue 1% interest on the amount. So you really need to do the maths, see whatever KRA is going
oh my goodness,
and go for it.
The numerous monies that we've lost, oh my goodness, we don't even get into that. But all the same, thank you so much, Geoffrey Nyamaeria, tax accountant, and Edwin Thiongo, tax lawyer. Asante sana. At a Business with KCK, I look forward to see you again next week. I'm sure it's going to be heated, even as we also ponder on what the budget estimates would be like, or what, of course, we'll be expecting for the 2021-2022 budget, which is supposed actually to be read this Thursday. If such is the case, then definitely we expound some more on that. It was good having you. Thank you so much for keeping me company from the word go. Up until now, we close it and we say asante. I get to see you again tomorrow. My name is Linda Alela. Do have